The next person I'd like to call that's going to be presenting is Mr. John Copplino, CEO of Tygrus. John, the floor is all yours.
All right, well, thank you. I'm trying to pull up the share, and for some reason, it doesn't want to share it right now. You know what? We'll do this without the, we don't need the special effects. Thank you for the opportunity to speak today. I want to talk about our technology company called Tygrus. We have a very simple formula for success. We manufacture two products. We make an extreme acid and an extreme base. These are new chemistries that we've patented that literally have thousands of applications in multiple markets. An example is we have an acid that can be used as a disinfectant that we've tested against COVID that effectively killed COVID in less than a minute at a 5-log reduction. That means it killed COVID 99.999% more effectively than most disinfectants, and certainly safer. What makes our chemistry unique is the safety aspects of the chemistry that can be used to replace hazardous chemicals. And the other thing that makes it unique is there are so many applications in so many vertical markets. So we talked a little bit about the cleaning space. We recently signed 3 contracts with international companies for $3 million up front on licensing using our chemistry as a replacement for the hazardous active ingredient typically used in disinfectants. One of the things everybody's aware of today is with COVID, people are using more disinfectants, which means more hazardous chemistry is going into the environment. And from a hand sanitizing standpoint, I don't know if you've looked at your hands lately from using all these hand sanitizers, it dries out the hands, and certainly putting hazardous chemicals and alcohol on your hands on a regular basis is not the best approach to keeping healthy. So we have an alternative chemical that can be used in disinfectant. It also is very effective in the agricultural space. We've run through this past year, we've done 42 trials in 7 states with 13 different crops. And when you add our chemical to the growing of any type of crop, we've seen increased yields in the crops of anywhere from 10 to 20%. Last year, we did about 350,000 with our ag tech subsidiary, Aqueous. We anticipate doing 2 to 3 million this year as we move forward on agricultural applications. Another application of our chemistry is used in the personal care cosmetic space. We recently completed trials with a leading manufacturer of cosmetics for leading brands like Estee Lauder and Revlon. And in the cosmetic space, we have the ability to take purified water that would typically be used to make a cosmetic formula for anything from a moisturizer to any type of tinted moisturizers or cosmetics, and have the ability to avoid using the preservatives. Because when we treat the purified water with our acid, we end up with a atmosphere where the bacteria can't grow, or that grows much slower. So we end up with being able to go to manufacturers and help them make their products better. Our company mantra is better everything, and we aren't looking to go direct to consumers. We are looking to sign licensing deals on a global basis to help manufacturers eliminate the need for hazardous chemicals that are typically used and replace them with a safe alternative. So from an investment standpoint, we would be considered an environmentally or impact investment or even an ESG investment. Since we started the company, we have successfully gotten 6 patents granted with dozens of patents that come behind it. We've built a brand new factory in Detroit for under $2 million. We generate gross profit margins of 50 to 60 or 80 to 90% with EBITDA and cash flow of 50 to 60%. So a highly profitable business model with a small barrier to entry of a $2 million cost of building a factory. We are having conversations on every continent with potential strategic partners in agriculture and in cleaning and disinfecting. We're just launching in cosmetics. And then one of our more exciting opportunities is in biotech, where we see this as a potential replacement for some of the hazardous chemicals used in medical device sterilization. It has applications in wound care. And certainly we're in the process now of starting clinical trials as a therapeutic for COVID using a nebulizer. So when you look at the company, there are a lot of opportunities. 95% of our energy is focused really in two areas. That's agriculture and cleaning. Our R&D team focuses across all the applications. And our structure is we bring in outside resources to help commercialize. So as we look at biotech, we'll bring in a separate biotech team that would help commercialize that product line and bring that to potential licensing partners. To date, we've raised about $12 million. Our most recent round that's currently active is a $3 million round that is 2/3 committed or funded at a $4.76 price, which is about a $100 million valuation. We recently converted our convertible notes at $75 million, which was $383. That was this past fourth quarter. And then we're looking at a larger round of $5 to $10 million in the second quarter of this year. John. In the second quarter of this year. So to summarize, patents in place, brand new facility, commercialized $3 million this past year, many additional licensing partners in the hopper, an incredible group of scientists and doctors who have validated the technology. We're looking for great additional investors who bring some strategic aspect to their investment. We're looking for additional licensing partners and looking for leading companies in agriculture, clean tech, and biotech. And of course, we're always looking for management as we continue to build out the team. Thank you.
Thank you so much, Sean. I really appreciate it. Which investor judge has a question? Raise your hand. Who'd like to go first? Scott Berman, you had your hand up first, so you go. Scott, you're muted.
Hey, John. Hi there.
Hey, Scott.
Good to see you, John. So I want to talk about the competitive landscape for what you do. Because you guys have been working in different verticals, how does that give you an advantage over folks that are trying to do this for cannabis? And who would you say are the top players in your market?
So our agricultural application, we have two applications, Scott. One is as a soil amendment to help with crop yield. So we don't compete with fertilizers or nutrients. We compete with additives. So it's a very limited additive market. It's also not very regulated. It's done on a state-by-state basis. That's allowed us to break into the market very quickly. So our strategy is always to work with potential competitors because we think we make their active ingredients work better. So it's a real advantage, not necessarily competing against nutrients, but actually enhancing the nutrients. And on a global basis, we're looking for leading agricultural companies, of which some we're talking to, that would look to license our technology, go through the regulatory process, and take it to market in their specific country.
Thank you.
Great question. John Nemanic, you had your hand up. What question do you have for John Copplino?
First of all, John, great job, by the way, on your presentation. I mean, you certainly didn't need the PowerPoint. You did just fine. I think you got a great business. My only question to you would be is what would be your anticipated exit strategy?
Yeah, we have, Ronald Reagan had trickle down economics. We have trickle up economics. So we've created subsidiaries that day one we own 100% of, like our ag tech company. And then we're going to create liquidity by either signing very large licensing deals that we can share throughout the shareholder base, take that company public through an IPO or a SPAC, or potentially sell the whole thing. So we may get an offer. For instance, Steve Johnson, who is one of our advisors, the ex-head of the EPA under George Bush, he sits on the board of Scott Miracle-Gro. That could be a perfect partner to buy us out. So we're looking either to sell a subsidiary, go public, or sign large licensing deals to create liquidity once again from the bottom on up.
Great. Thank you very much.
Any other judges have any other questions at all?
Yes,
Noble.
Yeah, maybe I missed it, John. I really like the business in a lot of ways. What was the format of the investment exactly? Is it equity, convertible note, private placement? I was trying to, maybe I missed it, but I didn't understand.
Yeah, great question. Just to give you some history, we have funded the company with virtually strategic partners and many Wall Street managers of VC funds. We have a chief investment officer from BlackRock, Goldman, Merrill. So we haven't gone the institutional route because we've only raised about $12 million. Our next round in the second quarter will be a $5 to $10 million institutional round. This current round is straight equity at $4.76 a share. And what we're in the process also, I didn't mention, we're converting to a C Corp. So this investment will convert into the LLC literally for a week or two. And then everybody will be getting common shares in a C Corp, which can provide us potential exit strategies down the road.
To piggyback on that, so the shares that we invest in, will they be preferred or common?
Common. Everybody will be in common.
John, do you have anything else to add? We have 1 minute left. Do we have any other questions from the investor judges at all? So John, I actually have a question for you, and you have 30 seconds to respond for the last question. I like how you look at several different options for liquidity events, but what's your time frame? If an investor were to give you money right now, are you expecting the liquidity to occur in 12 months, 24 months, 36, 5 years?
It's a great question, and it's something we're very focused on, because some of the original inventors are now in their late 70s, 80s, the guys that invented it that we partnered with a few years back. We're looking to get distributions into our shareholders, certainly, hopefully after a 24-month period, because we're in a growth stage right now. But that does not mean to say that an opportunity won't arise where we'll have the ability to sell a subsidiary ahead of that if we see the right opportunity. So we are very, very focused on distributions and getting liquidity to our shareholders, mainly because we owe it to our founders who invented the technology years back to make sure we get them some liquidity.
Great, John. Thank you so much. And John, you were perfect with your timing, enough time for Q&A, and we're exactly at the 12-minute mark. So kudos to you on that.
Thank
So
you,
very
guys.
good job,
It.
John. It's always a pleasure seeing you again. I remember the first time I met you, actually, I believe in the state of Maine several years ago.
It was, and then that was quite an event, if I remember correctly.
Yes, it was. So, so thank you again. Once again, John, can you please put your information in the chat room? Make sure you put all panelists and attendees. If you have any other questions, please reach out. John, I know for a fact you had at least 2 questions in there. So make sure you read the chat.